A nivel global, la banca centrada en la sucursal está dando paso a la banca centrada en la nube y en la movilidad. La inteligencia artificial conoce cada vez mejor el perfil de los usuarios de servicios financieros y transacciones vía metaverso serán parte de nuestro futuro. Es un honor presentar la conferencia magistral Banking 4.0, Metaverse and Chat AI Impact. Brett King es una autoridad reconocida internacionalmente, autor de libros bestseller como Bank 4.0 y Argumented, el cual ha sido citado incluso por el presidente de China, Xi Jinping. Ha impartido conferencias en más de 50 países, en medios que van desde TED hasta CNBC, BBC, Fox y Bloomberg. Fue consejero de la administración Obama sobre temas Fintech. Banking Exchange lo nombró el rey de los disruptores y es fundador de Moven, compañía de banca móvil global. We welcome Brett to the Digital Banking and Financial Technologies Forum.
Gracias. Buenos días. Okay, so we're going to get a bit futurist today. I have to find the right spot to talk so we don't get the foldback issue. I want to take you on a journey looking at artificial intelligence, robotics, some really future thinking in terms of the economy, and of course how it's going to affect banking and payments, and a little bit of crypto, a little bit of blockchain and the digital world, what happens next over the next couple of decades. So I hope it will be interesting for you, and I hope it will give you some new ideas. Have you heard of ChatGPT? So ChatGPT is a class of what we call generative pre-transform algorithm. This can be used as a method of deep learning to produce better hierarchical development of artificial intelligence in terms of things like language, or we have other examples of these GPTs in other areas, such as in art. We have programs or algorithms like Midjourney and DALL-E now generating artwork. We can now take music from a specific musician or a band, and we can produce new music using artificial intelligence to sound like that band. So wait for the Beatles with AI coming soon, I think, you know. And of course, the application from a language perspective is now that we can have AI that we can have a conversation with. Now, we're not quite there yet, but already we have ChatGPT is demonstrating it can write articles, it can write stories, and do things that we previously only thought that humans would be able to do. AI is, when we talk about artificial intelligence, we are talking about a whole class of different technologies, actually. If you talk about it in phases, you know, we really have to go back to the 1950s for the first experiments in artificial intelligence. And we started to try to replicate some of the human brain in terms of computer circuits with physical computing circuits back in the 1950s and 1960s. In the 1980s and 1990s, we developed expert systems like those that we use to play chess against computers. But in the late 1990s and early 2000s, we started to develop machine learning capabilities. And that's where we've had the big advances in artificial intelligence the last 2 decades, and why you hear about it frequently. So ChatGPT is an example of application of this type of deep learning mechanism. It uses a lot of data to be able to understand language. Now, AI doesn't understand language in the way you and I do, but it understands patterns in our language. When we look at things like translation, the reason we have had to use human translators is there's nuances, there's idioms, there's sayings that don't translate very easily from one language to another. This was very difficult for computer programs to solve this problem until we had deep learning. I asked ChatGPT, what is Mexico City most famous for? And this is what the answer it gave me. I think it's a pretty accurate answer, very good answer, very quick answer that you could get. ChatGPT is the fastest growing application on the internet to reach 100 million users. Faster than Facebook, faster than TikTok, faster than Instagram. So, and you have to ask the question, why are people so interested in ChatGPT? Well, maybe because it starts to give us a glimpse of the changes that we're going to see in employment and the world around us because of artificial intelligence. It's going to make some big changes. So this is the way we used to think about artificial intelligence back in the 1800s, like a mechanical man. This is the steam man of the prairies. And you could see that they didn't have electronics back then, no computers, obviously. So they imagined that we would use steam machines to create these automatons that would help us. The first use of the word robot actually comes from a play from Czechoslovakia, Rossum's Universal Robots. The Czech word roboti means like a servant. In this case, a mechanical servant. So the word robot actually is a Czech word that we use today. But the robots that we are developing today will be in many different forms. By the mid-2030s, there will be more robots on the planet than humans. So be kind to robots. You don't know what's going to happen in the future, right? But let me illustrate how robots will be used in just a few years. We're already starting to experiment with these technologies today. This is a movie called Mute. It's a German sci-fi movie on Netflix. And this person, he orders some takeaway food. And you can see the drone taking the food and the drone's coming back to this robotic restaurant that cooks the food. He wakes up in his apartment. There's a drone in the apartment, has dropped his meal on the table, and the drone lets itself out the window, and the window automatically closes. So this is robot delivery for our meals or groceries, things like this. This is what we're already seeing companies like Amazon, Alibaba, Walmart, and others experimenting with these technologies today. You'll also have vans will pull up to a neighborhood, open the van, and some robots will come out, like the ones we had previously. This one, and they will have groceries that can be delivered to your door or similar. So this is what we will see happening over the next 10 years in the economy. But robots could be quite big too. We would have ships on the ocean that could be robots. The concept here is that you would have a human pilot in one of these ships, the front ship, and the other ships would be linked to this ship and go through the ocean on an automated basis. And of course, we'll be sitting in robots with autonomous vehicles. Already, companies like Tesla are making some good progress on automated and Cruise and others. We have in the United States, in a few cities now, with autonomous vehicles already working. It appears that you are going to have some specialization, that building a all-purpose vehicle that can drive anywhere automatically is much more difficult than being able to design an automated vehicle for one city. This is an easier task than just having an autonomous vehicle that can drive everywhere. Now, this all started with these expert systems. This is Garry Kasparov being beaten by IBM Deep Blue back in the 1990s. Now, this took us about 10 years to develop this IBM Deep Blue computer that could beat Garry Kasparov. But essentially, this was done through programming all of these strategies of various chess masters into this algorithm. And Deep Blue could choose from those different strategies. But in 2015, Google developed AlphaGo, which was an algorithm that you could teach to play chess, or you could teach to play, in this case, Go, the Asian strategy game. Back in the time of IBM Deep Blue, we did not think for 100 years we could have a computer that would beat a human playing the game of Go. But in 2015, we achieved that, because we moved from expert systems to these deep learning algorithms. These are basically computer programs that can teach themselves to recognize patterns. If you want to have a good illustration, the way we would teach a computer with expert systems how to identify a cat versus a dog is you would have to have every type of cat, every type of dog coded into a database, and the algorithm would select from that. But this is not how we teach our children to identify a cat or a dog. When they see a chihuahua run past, and my daughter, when she was 2, she said, "Is that a cat, Daddy?" I said, No, it's a dog. This is how we teach our children, pattern recognition. So today, we are finally able to do this with computers. And this is the big change, that computers can learn like humans today. This is something that's new for us in terms of computing. So what the practical application of this is, if we pass things like medical diagnostics, like X-ray charts, and we do about 3,000 of these images to an artificial intelligence algorithm, it can perform at a similar level to humans. But if you do 300,000 or 3 million or 30 million cases, you get algorithms that outperform humans. Already for breast cancer diagnosis, we are seeing artificial intelligence find cases of breast cancer that human doctors have repeatedly missed. This is the technology we're looking at in terms of how it's going to change, this pattern recognition. And we use this in terms of facial recognition. It's being used in the payments arena. This is, in China, using Alipay and WeChat Pay. They now use facial recognition. And as we're going to talk about in a minute, this means that payments in China are much, much safer than payments in Mexico or payments in the United States, for example, because of using biometrics and facial recognition. But we couldn't do this without the use of artificial intelligence, without deep learning algorithms. It's said that in China they could find a person using their cameras, their security cameras, closed circuit TV, anywhere in China within 3 minutes using facial recognition. That sounds a bit scary, but the fact is, we all are already carrying around our smartphones with facial recognition. When we go through airports, through security, we have this. Facial recognition is already a big part of society today. The problem for humans with AI is that once we can teach computers to do the jobs that humans can do, with the application of deep learning, we will get algorithms that can work better than humans. So when we have autonomous vehicles that are successful, they will drive better than any human on the planet. And this will reduce road fatalities. When we think about trading, risk analysis, each of these areas in banking today that requires significant analytical skills, these could be, people in these careers could be circumvented with the use of artificial intelligence. Because of the information asymmetry. What this means is the reason today we go to a doctor or a lawyer or an accountant to ask their advice is they know more about the subject than us. But AI can absorb much more information than a human can. Millions, billions of times the information that an individual human can. And so, therefore, it can be more precise and more accurate. If you take a Tesla It records more than 1,000 times the information that a human driver can perceive when a human driver is driving a vehicle. This is the information advantage that artificial intelligence is going to have. Now, there are still areas where humans will have some advantages, more creative aspects, more experiential aspects, but we do think that AI is going to be very disruptive. This is what we classically think of supply and demand economics. You know, as demand for a product goes up, you have to increase supply. How do you do that? Well, in classical terms, you increase the number of human workers or human capital into the production process to increase the supply, with the objective to try and get this balance between supply and demand we call equilibrium. But in the 2050s, in highly automated economies, you don't have this link to of supply chain, at least, in terms of link to human labor. If demand goes up, you just increase the processing cycles. You just put more computing power to the problem. We already have factories like the gigafactories for Tesla that have reduced the number of staff working in those factories by a factor of 100 because of automation. And this is going to be the case in many of these fields where we apply AI. So when you have corporations that are being more successful in these future economies, it doesn't mean that they create jobs. They create more demand for artificial intelligence, but this sort of breaks the connection between human capital, human labor, and economics in the 2050s. But this will start happening already by the end of this decade, we think, that we will see techno-unemployment because of artificial intelligence, impacting a wide range of careers. So we have to think very differently about economics in this world. And this also includes things like universal basic income. This is sort of the yin and the yang of AI. If we introduce AI, we are going to produce incredible wealth through the markets and through corporations generated by the use of artificial intelligence. But part of that is because if you're a taxi company, you won't need a human driver anymore. You'll have an autonomous vehicle. If you're delivering goods and services, you'll be using a drone. So the costs will come down, but this will produce unemployment. So we have two choices. We can either leave this situation and see increases in unemployment over time, which will logically produce social unrest, or we use the immense wealth we have created from artificial intelligence to do something like universal basic income. But people are concerned that UBI, giving people a monthly income, even if they have no job, will mean that people will get lazy. But in the trials that we've seen around the world today, this is not actually what we see happening. UBI is showing that people start their own companies at a much higher rate than the general population. They get involved in more community activities at a higher rate than the general population. So it may not be all bad, but this is part of the problem we will have to solve because of high levels of automation in society. For now, it's not man versus machine. Over the next 10 years or so, it's going to be man with machine that has an advantage. So for your careers and for you individually and your businesses, understanding artificial intelligence and being able to integrate AI into your company and into your career is going to give you an advantage over the next decade in terms of employment, salary, and so forth. And there is very simple ways to do this. MIT, for example, has a very good artificial intelligence program that is free for people. Coursera, Udemy, others have very comprehensive deep learning courses that you can do. So you can learn about ChatGPT. We already have this class of experts emerging who know how to write prompts for ChatGPT, how to talk to the AI to get the best results. And this is the type of jobs that we are going to see emerge over the next decade. Jobs where you have specialization in using a certain type of artificial intelligence or helping companies get value from this technology. Which brings us to the world of fintech and banking and how that's going to be impacted by AI and these other technologies that we're going to be working on. So you can see depicted here smart glasses that have transcription or translation. So you'll be, for example, if I come and visit Mexico City, my Spanish is a little poor, but someone talks to me in Spanish, either my AirPods or my glasses will be able to translate the Spanish into English for me, and vice versa for someone here. So what this means is with this injection of technology into banking and financial services, already we are starting to see that the ecosystem of financial services is very different from traditional infrastructure around banking. So by 2025, these are the players that are going to be delivering banking on a day-to-day basis. Mobile wallet plays, contextual credit, the use of artificial intelligence, all of this is part of this specialization. So you have fintechs, companies like RappiPay and Nubank, as examples in LATAM. You have the tech giants like Amazon and Alibaba, Alipay in China, Apple with the Apple Pay and Google Wallet, other technologies like this. And of course you have the banks. But I say surviving banks because already over the last 15 years or so in the United States, we've seen almost the number of banks in the United States has almost halved because of consolidation as a result of digitization. So what we do know is that over the rest of this decade, we are going to see many banks disappearing because technology companies and fintech companies are coming in and taking some of the role of traditional banks. Look at Nubank. Nubank has now almost 60 million customers across Latin America. This is more than Itaú, the largest bank in Brazil. And they've done this in just 8 years. They've grown to this stage. So this is already disrupting the market, and we see it in many markets already. The more people today use a mobile wallet than they do a classical bank account. Again, we're going to talk about this in a moment, but this is part of this ecosystem change we're seeing. So I talk about Bank 4.0, but let me describe Bank 1.0 and the various stages. So Bank 1.0 is traditional banking. This is developed from the days of Medici Bank in the 13th century to up until the 1960s and 1970s when we started to use mainframe computers in banks and then started to develop self-service technology like the ATM, telephone call centers, and then internet banking. So this is what we call the Bank 2.0 era, the era of self-service banking. Then Bank 3.0 is the app era, where we're seeing the creation of new types of banks built around mobile banking apps. And this is the 3.0 era. So the whole fintech boom basically happened because of the smartphone. When the internet first came along, banks were quite happy that the internet didn't really disrupt their industry like it did retail and other businesses. And many bankers said, see, the internet, it didn't close the branches. It didn't happen. But the mobile has definitely had their impact. We reached the peak number of branches globally in 2019. The world is now seeing the branch traffic around the world contracting because of the use of mobile. The pandemic sped this up a little bit, but by 2025 in the United States, the number of branches in the US will be half what it was just in 2008 when they hit their peak. And so this has happened very quickly in relative terms. We hadn't seen any changes to branch banking for hundreds of years, really, in terms of modality. Bank 4.0 is the embedded banking world. So we're starting to see this with things like the use of mobile wallets, We'll soon see with smart glasses, with some algorithms being used, sort of contextualized banking. Banking when and where you need it. And I'm going to show you some examples of that. And Bank 5.0 is when you don't have banks and you don't have money in the classical terms, when the economy is run by artificial intelligence. And this is not going to happen for another maybe 40 or 50 years, but we can see an end to the way we think about traditional banking because of artificial intelligence. Pretty much every function of banking that we do today could be replicated or done by artificial intelligence in the future. So this is a big change, big shift. Now, when we saw the smartphone came along for the Bank 3.0 era, you know, the first thing we thought of was maybe we could use the phone instead of a credit card. You could tap your phone to pay. And in the West, what we did is we took our plastic card out of our wallet and stuck it inside the phone, so that you see a picture of a card inside your phone. And this was driven by, in the West, by companies like MasterCard and Visa, who wanted to keep the current point of sale network and interchange business alive. So mobile phones had to adapt to this system. But in China, it was very different. China didn't have large card penetration, and so they went straight to mobile payments using QR codes initially. Alipay, Tencent WeChat Pay. And now we have developed those platforms into using facial recognition and these other technologies. And today, 98% of all mobile payments in China go through these two companies, Alipay and Tencent WeChat Pay. And they have grown in terms of usage to exceed that of the card schemes. In fact, in 2021, just the Chinese mobile wallets did almost $77 trillion US of mobile payments, transactions. All of the plastic cards in the world, debit cards, credit cards, gift cards, did 38 trillion. Half what just China did on mobile wallets. But China's not the only mobile wallet players. We have M-Pesa in Kenya. We have MTN Money in Nigeria. We have Paymaya and GCash in the Philippines. We have Kakao in South Korea. We have Paytm in India. We have mobile wallet schemes all around the world. Today, 52% of the world use a mobile wallet as their day-to-day bank account. And all of the mobile wallets globally do 3 to 4 times the number of transactions we do on plastic cards every year. So already we know today that the mobile wallet is the primary bank account for the world. It's not a plastic card. If you're in a bank and you're still issuing a plastic debit card, this is 1970s technology in a 21st century world, right? And so banks in these markets have had to adapt. Banks in Africa have had to partner with M-Pesa to do lending, for example. Banks in China have had to move into the cloud and put their apps in WeChat and Alipay to be able to connect with their customers. This has produced a significant shift. But what about fraud and cybersecurity? Well, actually, if you look at Alipay, this is a great example. Alipay has very, very small fraud, just 0.0006 basis points of fraud. Basically, zero fraud, if you look at it on a statistical basis. This is a rounding error. But in the US, card fraud still accounts for 11.2 basis points of fraud. This means that if you're using a Chinese mobile wallet in China versus using a credit card in the United States, the Chinese system is 10,000 times safer than using a plastic card in the United States. But I thought the US was the best country in the world, right? The best banking system in the world. No longer the case. When it comes to banking and payments, the US is about a decade behind China and many other countries around the world today. Because The US has tried to protect the existing businesses, the existing banks. They don't have a Fintech charter, for example. All of the other G20 countries have Fintech charters. They have restricted the use of cryptocurrency in the US. These are all examples of them trying to favor the incumbent industries. But already we can see how mobile wallets are changing the way we think about a bank account. This is Apple Pay, and you can see a few features here you can't get from a plastic debit card. You get transaction history by category, so your transactions are categorized. You have a geotag, so I can see where it was that I made a transaction historically. And for players like Google Wallet, we now have predictive cash flow, where I can tell you what your upcoming bills or invoices and so forth might be in the future. If you can't afford to pay for your car insurance, in 6 weeks' time, your wallet will tell you, and it will give you options. Maybe take some credit, or maybe go drive for Uber while you still can for a few hours to earn some extra money, whatever that is. So these wallets are getting smarter in terms of helping us manage our money. This is something that a plastic card, a checkbook, or a passbook does not do. This is the advantage a mobile wallet has over a traditional bank account. It's smart. It can help you manage your money. It can help you save money. It can give you access to credit contextually. And this is happening not just in retail, it's happening in the corporate and SME banking world as well. You're seeing players like Xero, an accounting firm, working with Starling Bank in the UK. So when an SME logs in to their bank account behind the login, their accounting system is linked inside the login, and all of the accounts are automatically updated by artificial intelligence. Same with tax payments and things like that. So the wallet of the SME world is something that helps you manage your business, helps you manage your cash flow, gets you better access to credit. Again, if you're a bank or a lender, and today you have to ask a company for their financial reports, or you have to ask for a signature on a piece of paper before you can provide a loan, you are going out of business, being replaced by these technologies. It's already happening around the world. And great examples of this is the merchant funding programs we see tied to platforms like Alibaba in China, like Amazon in the US. Alipay, linked to Alibaba in 2021, supplied 53 million small businesses. They supplied loans to 53 million small businesses. Over $20 billion of lending done to SMEs through mobile wallets in China in 2021. Amazon does a couple of $2 billion of lending every year, and that's increasing. But obviously, these platform approaches are going to be much more critical for the growth of credit business in the future. Fintech, of course, has been growing very rapidly. In 2021, $210 billion invested in Fintech. And there was a downturn, but 2022 was still the second largest Fintech funding year in history. So we see the growth of these Fintechs is not slowing down, it seems to be speeding up. WeBank has 320 million customers in China. They started as part of Tencent, but now they're a separate listed company. Their market cap is 70 billion today, making them one of the top 20 banks in China. And by customer numbers, they're in the top 10 banks in China. And this is in 8 years. You couldn't grow a bank with branches to 300 million customers in 8 years. It's not physically possible. This is what we call digital scale. We see it also with our friends at Nubank. In June of 2021, they raised $750 million for their IPO. At that point, they had about 40 million customers. Today, they have almost 60 million. I have to update this slide in just 8 years. And if you look at their growth, they are the primary bank account for most of their customers. Their cost of acquisition is just very small compared with the traditional banks there. Why is it that the market is valuing Nubank in this way when Itaú, a 100-year-old bank with 55 million customers, is valued at 42 billion? Why can a new bank that's just 8 years old be valued at the same as a 100-year-old bank? Primarily because of their growth potential. They can grow very cost efficiently, or cost effectively. And this is really the game that the fintechs are playing. If they can break the problem of acquisition digitally, we're seeing these big valuations. And it's changing the way the market talks about banking as well. We have Revolut in the UK. They have 25 million customers now. They raised 800 million back in 2021 when they had just 16 million customers at that time. And the thing is that if you look at these players, the fintechs, they work very differently from traditional banks. They don't talk about their core system. They're in the cloud. They have their tech stack. This is how founders talk about their technology, their tech stack. They use artificial intelligence, they use the cloud, they use data science, all of these techniques. But the banks still have these on-premise core systems that they have to migrate off of. And migrating from a core system for a bank, an average bank, is going to cost $1 billion+ and take 10 years. So this is a massive undertaking. These new entrants don't need. They can build their tech stack up very rapidly because of available cloud capabilities, as an example. So when you look at all of these changes with artificial intelligence, the way money is working, the way banking is working, the way companies will work in the future, we are starting to see the emergence of this concept of digital and versus physical assets. The digital world, the automated world versus the physical world, and challenges between these two systems coming. When we talk about the digital world, a lot of what we're trying to model, if we're doing the Metaverse, for example, we are creating a world in the Metaverse that you can use in virtual reality. But at the same time, we're also using the Metaverse and Web3D to create digital representations of our physical world. For example, when Tesla, when their autonomous vehicle is driving, it creates a virtual representation of the world in a digital map. This concept we call digital twins, the ability to take our physical world and map it into a virtual model that replicates the physical world. For the Metaverse, for these autonomous vehicles and drones operating, they need to operate in a digital world that represents what the physical world looks like. And this is happening increasingly in real time. How is this going to affect money? Well, when you have highly automated societies, you need programmable money. You need digital money to work in a digital world. You can't use physical currency. This was anticipated by William Gibson in his book Count Zero, where he said money won't be illegal, you just won't be able to use it for anything in the future. And when we talk about the Metaverse, this is only a fairly recent concept. It was in the mid-90s that Neil Stephenson, the science fiction author, first used the phrase Metaverse to describe this virtual world in VR. And so when we start thinking about the impact of these smart economies, autonomous economies, you have really the old world value systems competing with new world value systems. In the old world, we had things like commodities, like oil and gold and metal, and commodities trades was very important. But with the renewable energy market, with autonomous vehicles and so forth, all of these highly autonomous economies emerging, we are shifting away from the physical industrial world to the smart world. And this changes the way we value economics. So to create the Metaverse, or digitize the planet, we're creating a lot of different tools to do this. Yes, we have blockchain, we have cryptocurrencies and central bank digital currencies, we have decentralized protocols, we have utility-based tokens. For example, this can be used in, like the generation of energy. We have NFTs, digital intellectual property, virtual real estate in the metaverse. All of these are parts of what we're experimenting with to create basically a programming landscape for the digital world. And we see with the collapse of FTX that the traditional world is trying to fight back against these digital economies. Trying to say we must introduce regulation to slow down the cryptocurrency boom, to control it, because they're trying to reduce the impact it's having on the traditional system. But by the 2050s, we can expect that a lot of our economy will be run by artificial intelligence, machine-to-machine economy. And AIs may create their own currencies. They may not use central bank digital currencies or US fiat at all. They may create their own value systems as well. This is going to be something that's a real departure from economic terms, because we won't be able to necessarily know what these algorithms are doing. We don't know how AIs are better at predicting breast cancer than human doctors. We don't know how the AI beat AlphaGo. How it beat Lee Sedol, the world champion of Go. We understand the output, we can see the output, but we don't understand how the algorithm works, because they're coming up with different logic, not human logic, it's machine logic. So when it comes to the way our economy will be in a highly automated economy, humans will lose the understanding of how the economy works at some point because of artificial intelligence. Either that or we have to ban AI. And the market doesn't want that, because AI is going to produce so much wealth for the world. But if you think about these structures like the blockchain and the digital world, are we really comfortable having our DNA and our children's DNA on the blockchain for everyone to see? Or do we need layers of security and infrastructure there that protect some elements of our way of life? This is what we're experimenting with and trying to figure out right now. And of course, you'll be able to buy a home in the metaverse. And some people think that we're going to spend our time in the metaverse in the future because of the problems we have in the real world, because of inequality and unemployment produced by AI. We'll sit in the metaverse and we'll be happy. This is what Mark Zuckerberg wants us to do, right? But there's plenty of other scenarios that are possible. Of course, Apple is getting into this game. They're going to launch their smart glasses later this year. I think they're going to be calling it the iReality glasses. So already we're starting to see this is going to be the next platform for personal consumer electronics. After the smartphone, it becomes the smart glasses. So how the smart glasses work? Can we drop the volume a little bit? So this is Project Aria from Oculus or Facebook, Meta. And these smart glasses use cameras and radar-type systems to detect images in the world around them. So it can recognize objects like desks or lamps or chairs or faces of humans. You could ask your smart glasses, do you know where I left my car keys? And it will remember, using image recognition, you left your keys on the coffee table and give you a GPS locator to find your keys. When you go to your local coffee shop, your smart glasses will talk to the AI at the coffee shop and give your order for the coffee shop, so when you walk in, it'll be ready for you. Same when you walk into other stores, your online preferences will come into the offline world and vice versa. So these smart glasses by 2025 are going to be commonplace in the West, and certainly by the end of this decade, we expect augmented reality to be a big part of our world. So when we talk about the metaverse, we're not just talking about VR. The dominant form of the metaverse will actually be augmented reality applications. And just like we saw with the boom in the application of Fintech, through smartphones and the internet with the .com, the next boom will be combining artificial intelligence and augmented reality glasses. So you walk into a grocery store and your glasses will tell you, you don't have enough cash for your groceries. Do you need some extra cash? Right? Or you walk into a Tesla dealership and it will say, you can't afford a Tesla. You have to go to Toyota down the road. Or when we walk into a listed real estate property, your smart glasses will give you a home financing offer. If you're a mortgage company waiting for someone to come and ask you for a mortgage in this business, you're dead. Because you must know the intent to buy a home to be able to give the offer in a smart glasses. If the only way you know that someone's interested in buying a home is if they come and ask you for a mortgage, you've already missed out. So this is the new boom that's going to happen after the Fintech revolution with these technologies. I'll leave you with this one example. This is the Metaverse as displayed in Ready Player One. You can see Parzival, the main character here. He goes into a store and he buys this boot suit. And that's the wallet interaction right there. He uses his wallet to buy this boot suit, and it's sent to his home in his trailer park. But this is a great example of how wallets are going to be for the metaverse. It's going to be for AI. It's going to be used for day-to-day banking. It's going to help you manage your money, and you won't go to a bank to get this capability. It'll be inbuilt in these operating systems. So this is how the market has responded to these technologies. We talk about market capitalization, lifetime value, customer acquisition costs. These are the ways already Fintech has changed the performance of the industry. We don't talk about asset size or non-performing loans ratio and things like that, return on equity, like we used to about banks. Banks now are measured by the metrics we use for Fintechs, not the other way around. This has changed and reshaped the industry. So for banks and players in this space, payment companies, lenders, fintechs, it's all about the scale. This is what we are learning. The fastest growing financial institutions in the world are all based on digital scale, the ability to grow their customers digitally very rapidly. And that's really the future I wanted to talk to you about today. It's the world of Bank 4.0. Thank you very much. Check out the new book as well when you get a chance.